Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com, and today we're going to have a look at the 22nd COT report in 2014. As usual, we're going to start off with the changes in commercials position, so here we go. As you can see, we've got the Japanese yen on top of our list with a 23% change in commercials positions. We've got 17 in large speculators, and again a much larger than average change in small speculators. You can see the changes over here. This is of course a bullish COT change signal, and as you can see on the chart, these changes are usually pretty effective signals in the Japanese yen. Of course, not always. We do see some examples on the other side. But it is a bullish signal, possibly pushing prices a bit higher. Let's open a 5-year chart and see how extreme this market is. Here we go. You can see, of course, that we've talked about this maybe even in the last review, that we had this extreme a few months ago. This was a not an all-time, but close to it, an extremely large extreme in the market, and as you can see, we haven't gone below that level. So it basically means that this extreme is still in place, and in the medium to longer term, we are expecting further rises in price, and basically that's it. If of course if prices do go below that level, it is clear that we're going to be expecting a much wider extreme in the market. Let's move on and have a look at heating oil. We have a 19% change over there in commercials, 13 in large speculators, and 29 in small speculators. Occasionally we do see pretty large changes in small specs. What's interesting to see is its commercials have just became net long, just a bit, a few 100,000 contracts net long. It's mainly small speculators who are very optimistic about the market. But let's open a 5-year chart and see how extreme heating oil is. Here we go. You can see that we are actually not at an extreme level. We get to one if commercials can reach about 30,000 contracts net long level or more. That would of course be a bullish COT extreme signal. I'm just showing you a few examples for that. If the opposite is the case, and the extreme would be widening in the opposite direction, we would have a very nice bearish COT extreme signal if commercials would reach roughly the 60,000 contracts net short level. Of course, that's not the case right now, so I would say the last major extreme was this bullish one. We had a relative bearish extreme. We did see some decline in prices. The picture isn't that clear right now, so it's basically the change that may affect prices in the near term. Soybeans, our next market, we have an 18% change over there in commercials. You can see the change size over here. Larger than average, no question to that. We have seen greater changes in the past. Again, analyzing the charts, we can state that more or less these change signals are good. In this case, we are expecting prices to stop this decline, and we may see a bit of a rise coming. 5-year chart. Let's have a look at the COT extreme on this 5-year chart. You can see that actually small speculators are pretty extreme above the market. They've reached a 216 report extreme. And commercials and large speculators are becoming more and more extreme. There's still some space left. This level I'm showing you on the chart, these levels are actually levels that I would consider very extreme. There's still some weeks left to really get to those levels. Of course, these would be bullish COT extreme levels. You may see some examples on the chart, but as you can see, prices have actually gone higher. So we may actually see a bit of a decline now, and then when we reach a larger extreme, then the rally can evolve. Moving on to large speculators, COT Extreme. Here we go. Silver is on top of our list with a 581 report extreme in large speculators. That's huge extreme. I don't even think we're going to see that on this 5 years chart. Large speculators have almost gone below the zero line. That is clearly a very strong bullish COT Extreme signal on large speculators side. You can see, of course, commercials becoming more and more extreme with the market. Small speculators are not that extreme, at least what we can tell from this 5 years chart. So it is a bullish extreme that may push prices higher from here. So it's advisable to have your eyes on this market. Let's move on and have a look at the Australian dollar, where we have a 56 report extreme, both in commercials and large speculators. Let's open the 5 years chart right away and see this extreme on a wider time frame. And as you can see, basically we have no real large extreme at the moment. Of course, you can see some examples that even relatively larger extremes compared to the last, let's say, half a year may affect prices, but it's obviously more difficult to tell if it's going to be an effective signal or not. It would be an unquestionable bullish extreme, of course, if commercial could reach 90, 100,000 contracts net long level. This was the case, of course, a few months ago, and I would say that this rally that has started is because of that extreme back then. We'd reach a bearish extreme if the opposite would be true, so below 100,000 contracts. Net short, of course, in case of commercials, would be a level of extreme where we'd be expecting a top. I was just showing you a few examples here on the chart. And then Mexican peso, our last market for the review, a 52-week report extreme in the peso, opening the 5 years chart. Here we go. The picture is actually pretty similar to the Australian dollar. I would say commercials may be a bit more extreme towards the bearish side than in the Australian dollar, but there's definitely space left to really reach those levels. This bullish extreme a few months ago is still in place, pushing prices higher and higher. We still need to reach these larger net short levels, again talking about commercials, to really get a good bearish COT extreme signal. Okay, that's going to be all for this week. I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.